Future Millionaires, Wagwan, welcome back to the channel. Now, if you've been hearing all this talk about investing and wondering, should I be putting my money in stocks or unit trusts? Because there have been a big push now with unit trusts and everybody's talking about them. So stocks, unit trusts, it can feel a bit much, right? But today I want to break down both options in a way that's simple, clear, and hopefully helpful. So whether you're saving for something big or just curious about growing your money, we're going to figure out which one of these options makes sense for you. All right, so let's dive into it. And again, thank you to JMMB for partnering with me on this video. You can also check them out for investment advice to start your journey, whether you want to invest in stocks or whether you want to buy into one of their unit trusts. All right, cool. So let's kick it off like this. What are stocks? Now, when you buy a stock, you're buying into a tiny piece of a company. Now imagine a big pie and every stock is a slice. Now, when you own a slice, you're basically part owner. Now, if that company does well, your stocks would go up in value, and if not, it would go down in value. And it's exciting because there's potential growth, but it also comes with a bit of risk. Now, some people love to think of stocks as their mini empire, but remember, every empire has its ups and downs. And a good example is going to be, let's say, Trans-Jamaica Highway, because if you bought that stock like 4 years ago, then you would be sitting on a good amount of money today. But that ride hasn't always been smooth. You've got to have a bit of a stomach for risk, but they can be worth it if you're in it for the long haul. Now, stocks may be a great option if you're comfortable with a bit of risk and want to be actively involved. You're right there, right in the waves with the company you've invested in. Now, what are unit trusts? Now, think about these as a collection of investments. And these are my investments, like a big basket of different stocks, of different bonds, and some other assets. Instead of putting all your money into one company, you're spreading it around. This basket is managed by the professionals. That's why I'm just like this today. So you don't have to pick individual stocks or check prices every day. It's a more of a hands-off approach. And I was joking. I'm not a professional. At least not yet. Now picture this. Instead of putting all your money on one horse, you're putting a bit on several horses. Maybe not as exciting, but it's definitely safer. Now, unit trusts are a good option if you're looking for stability and you don't want to monitor the market all the time. They're ideal for people who want to invest but also want to sleep soundly at night without worrying about every market swing or every news that's coming out. Now that we know what stocks are and what unit trusts are, let's compare them. Now, stocks are great if you want to be hands-on and have that potential for higher returns. But remember, if the company has a bad year, your stock can take a hit. Now, for example, let's say, for example, you put some of your money into a tech stock like Apple or Tesla. Now, these companies can bring in some great returns, but they're also volatile. Now, with unit trusts, the returns may not be as exciting as stocks, but they're often steadier, which can feel like a safer bet, especially if you're starting out. You just start your journey. So if you're thinking long term, and I mean up to 5 to 10 years, and you don't mind a bit of risk, then stocks may be the adventure you are looking for. But if you want to grow your money without too many surprises, then unit trust could be a better fit. Now for the $1 million question. This is not going to be a long video, I'm just getting to the point. Which one should you choose? Well, ask yourself a few questions. Are you okay with the ups and downs of the market? Do you enjoy keeping up with the business news? You watch it every night on TV? If so, then stocks could be right up your alley. But if you're looking for peace of mind and stability, then unit trust could be more your style. And I get it, money decisions are very personal, and that's what a lot of us need to understand. It's not one size fits all. Sometimes a mix of both stocks and unit trust is the best way to balance risk and growth. So start with what feels comfortable and build from there. Investing isn't a sprint, it's a marathon. Now, whether you're more of a stock person or a unit trust fan, or maybe both, just know that starting is the most important step. You can analyze till God come, but if you don't start, you're not in the game. So take your time, do what feels right, and you'll get there. Now, thanks for tuning in. My future millionaires, thank you very much. Let me know which option that you're leaning towards in the comments, and don't forget to like, share, and subscribe to this channel. Give JMMB a link, call them, go on their website, or open that account online. You can do that now on the JMMB website. And yeah, let's get this show going. Let's get the money goals going for 2024. Wrap up the year good. Until next time, work hard, make money, and happy investing.